Moody's downgrade USA bonds to Aa1, and this is not going to be a funny matter because the repercussion is crazy, and you cannot believe that what will happen next. And Michael Burry sell his stocks while I believe the Nasdaq is going to drop 1,000 points. Now this is going to be a very big video for today. Please go into details right now, but this is going to apply as usual. Now, one thing to note itself, right, is people been asking me, then what caused the stock market to go up then? Well, we do know that the CTAs have been buying. They bought about $120 billion of global equities, of which 31 billion was US equities. All right, that's quite a bit. But if you compare the high and the low, if you look at it right now, the high point and the current price right now is still about halfway mark, but the Dow Jones have recovered more than 42,000 level. So at this junction here itself, I cannot believe that the buying itself is pretty selective. And because of that, right, I suspect that this is going to be because of the different CPI data. The CPI data has basically from a low end of 0% went all the way to 8 to 9% during the subversive signals. And then after that itself now it's coming down. But you must understand how this CPI really works. It's telling you that how fast the speed went up. All right, so prices may still be at a high level, but the speed of the inflation is going down in terms of the speed wise. So it's not a real classification of the CPI has fallen. And of course, we do know that recently the crude oil price came down a fair bit, hence therefore caused a little bit of the downside cost. But we do know that crude oil price is going back up again. And now the thing is this, I believe and been strongly been advocating that the yield is going to be an issue. Now we can see now we have a very interesting thing whereby normally itself we do see that the yield and the Dow Jones they go in an inverse direction, but now we are seeing something different. And now the 5 years, 10-year yields are shooting up because of the Moody's downgrade. And the thing is this, even though inflation has ceases, but the thing is this is not going to hold because now we can see that investors are starting to believe that recession is going to be out of the window. As a matter of fact, now more than 60 people, the respondent basically feels that the recession won't hit, and that is where the rising concern. When everybody sees that, but the bond yield is going up itself, it actually tells you that something big is going to happen. And thing is this, remember Michael Burry when he came in to buy Alibaba back then in this 2023 when he bought this share itself. We all know that he bought the share somewhere in 2024 or in May period. So there's error here, not 23, 24 during the May period, this somewhere around here when he bought Alibaba share, and now the share has went up quite a fair bit. So he has been pretty correct because when the time when he buys shares around this period of time, many people were saying that he is wrong and they think that the China market will crash, but he got it spot on. Now the thing is this, something has happened. We do know that the Fed rate versus Fed debt is crazy because look at from 1980s itself, right? Although the Fed rates have been going down all the way, but you can see that the total public debt has risen by almost 36 times from 877 billion to now 36 trillion and it's still climbing. My God. So if you look at it carefully now from 1980s or 2020s, right? Although the Fed fund rate has came all the way down itself, but look at it, the public debt has went all the way up, right? But now guys, take a look. There's something very critical. We have the Fed fund rates going back up again. Wow, you can see that the federal debt is still at a high point. So now, which means that you're going to take this number, multiply by this number for the interest alone. Now, this is going to be very, very damaging for the entire US market. And that is where Donald Trump is very, very unhappy with. And of course, look at the nominal GDP right now. It has been steadily going down. And that is although due to the Fed fund rate going down, but look at this now, guys. This is not showing any good sign because you can see that the nominal GDP is coming down again. So despite the Fed fund rate is going up, the GDP numbers is coming down. So which means that US, the probability of entering a recession is going to be very, very high. Now, 3 weeks ago, I've been telling you guys to be very, very careful. And as a matter of fact, it have hit a viral video for myself. 2.3K video was people watched this thing about US bonds. And I said that the US bond market will crash again. And after that, the stock market will follow. And of course, people have been telling me that I'm wrong. But take a look, guys. Look at where I call for the sell at the bond price. it was pretty trade at 89.50 and went all the way down to 85. All right. So that's about nearly 5% drop, right? But more important thing is how I believe that the bond market will continue to fall. I believe we'll see 83 in the near term. Now, why do I say that? What's my reason for saying that? Let me explain this to you. So now the thing is this, you can see right now that the bond yield has came to 4.5% and pulled back, but then everyone say that the coast is clear, but you don't see that. As a matter of fact, yourself can see more mainstream media are coming in to say that the bond market is fighting Trump, and very soon the Fed will lose control, which I totally believe in that. As a matter of fact, yourself, I believe that the VIX is going to be a good buy very, very soon. I think the VIX will be a good buy about 16 to 15. I think that this will be a good level to buy, 16 or 15. It'll be a good price to buy. And after that, I believe it's going to go up to at least to 35. Now, when will that happen? I think it will happen within the next 2 months. I think this is something that I believe will be happening. And if that happens, it's all right, going to be a good profit for us because the risk is like 3. The risk is at 3 versus the potential of 20. So we're talking about 1:6 ratio. I think it's a very good ratio for investment. But of course, again, you have to take your risk management, all right? And the thing is this, you can see right now, Michael Burry has offloaded 90% or 95% of his shares, except for Estee Lauder, whereby he actually added. The rest is out been selling from Alibaba to Baidu to Jingdong to Molina to Pinduoduo. He has been selling. He has been selling. And the same thing as right now, only he sell, he has been putting a lot of puts in the market. He put on Nvidia, he put on Alibaba and Pinduoduo. So the question is this, the Chinese market has been going up all the way very nicely. Then why is he doing that? That is something we don't understand, but we all know that he has a knack for investment. And the fact right now he's doing this, who knows, he knows something, or because now with the ongoing problem now with all the tariff of 30% on China, that will still give a hit to the Chinese market. So what you look at it right now, if the China or the Chinese and the Japanese decide to dump their treasuries onto the government bonds, right, and dump in the market. There's ongoing rumors say that they will do that because things are getting out of hand. But again, we cannot be sure. And we do know that defensive stocks are in the buying mode right now. Apparently, from cyclical, they're moving to defensive stock to a second straight day. So if this is happening itself, right, maybe the funds do know something going to happen in the near term. And because of that itself, right, you can also see that Moody's downgrade is really timely. As a matter of fact itself, right, we can see now that the 30-year yield have pushed up to 5% because of the Moody's downgrade. And you look at the fear and greed index right now, we are actually at the greed. Now, 1 month ago, we were actually at the extreme fear factor, and now we are actually near the greed area. And of course, based on what you see on timeline, we are actually near the October level. And if that is the case itself, if the market do pull back like October did, then we're going to expect a pullback of around 1,000 to 1,500 points on the Dow Jones. And of course, that will also lead to about 1,000 points on the NASDAQ. So that is the reason why I believe that traders, you should be very careful on going for this coming week. And I think that based on what I'm seeing right now, the short interest on the bond market is really crazy because you can see that even during the Lehman Brothers, the pervasive sickness, the type of huge volume we have is nowhere near to the current level. Now, of course, some people argue that this could be due to a massive short in the market. And what if the thing reverse, what happened? Now, I don't think it will reverse in the near term, but as a matter of fact, I believe that when the bond market really crash down, the stock market will follow. Then after that, the short interest will reverse and go back into buy into the stock market. And that is what I think will happen in the near term. As a matter of fact, if you look at the NASDAQ, you can see that the top itself is incredibly identical. You have the dojis in the top, you have the flatness on the RSI, something I don't see for quite a while. And we do know that what happened to the NASDAQ was crazy selling. So I believe that we're going to see a little bit of a sort with somewhere around here for about 1,000 point drop in the near term. And of course, at the same time, you can see that the NASDAQ 100% bullish percentage index indicators show that we are actually near the top area here. So we need to be very, very careful And this morning we have been shorting the market, and I hope that you've been doing that on your own, because now the percentage of stocks with RSI above 70 is really at a high level. And usually when that happens, we do see the market pulling back down. All right, guys, this is something that we need to follow. And we know that this will likely be happening with the Moody's downgrade in the market. So likely the Nasdaq will be falling over the next 2 days if the statistics proven correct since 2020. And of course, using the Dow Jones on our CRAZII indicator itself, you can see that right now the boys are still buying, the retail are still buying, but the trend line tells us something different. And the DJDD tell us that there could be a chance that the Dow Jones may pull back to 42,013 today. All right, there's a very good chance that this may happen. And of course, if the selling persists for next week itself, wow, we may even see 41,375 for the market. There's something that we need to take note, and I believe that traders, you should watch out for that. But for the Nasdaq, it's even clearer. The boys are already selling, as you can see over on our screen. And of course, the DJDD, I suspect that today the Nasdaq will drop to 20,867. And in fact, if the selling really persists, we may even see 20,394 coming. So one thing to know, if you don't feel like shorting the market, you can do something different. You can buy something. Buying what? You can buy into the VIX itself, as I mentioned earlier. All right, guys, so I wish you all the best and hope you make money from the market. This is Cal signing off. Take care and have a great day. Bye-bye.